I'm back, and I'm back again for the afternoon. So thank you for tuning in to this one as well. I appreciate that. And just to kind of start off, what I want to talk about today is, for one, uh, who out there is a Back to the Future fan? And if you can raise your hands out there, no one's going to see you at home, so you're totally fine. You can do that. And, at least I would say most people know about them, and they recognize the car when you see it. And, it's something that, I know many times I've tried to buy one. My wife won't let me buy one of those. So I'm gonna have to just keep putting pictures in my presentations so I can feel good about that. So, but a couple of things I really do like about, you know, obviously I do like the Back to the Future movies. I like be able, the idea of having to go back in time and fix things. It's always a good thought. Also for GASBs, there's a lot of GASB statements out there that, even as us as auditors, when we have to go through them, they are difficult, and sometimes we have a hard time understanding why they wanted to change something when it wasn't broken before. With this one, I do think, and we'll get into when this took place, but this one, I think in a nutshell, was something that actually clarified things, actually fixed some things that maybe people didn't understand before. So I really do appreciate when actually did this one. This is probably one of my favorite ones. And I think when some people start in a position that you have out there, maybe that's a topic that hasn't been brought up to before. Maybe you don't know what this is really or just what it entails. So today I hope that I can give a little light, shed a little light on GASB 54 and how it might impact you and your organization. Okay, so you see the picture, couple pictures up here, and I'm sure at home you're probably thinking, man, I know exactly who that is. And on the bottom picture, I know exactly what that is too. And just as a quick a question out there for you is, do you remember when or how Dr. Brown actually invented this this item at the bottom and what it is? So you probably already answered yourself at home, but yes, it is a flux capacitor, what makes time travel possible. And Dr. Brown actually did invent it after slipping off hanging a clock. So if you knew that already at home, good job. And so with using that technology, we are going to go back into time to visit GASB 54. So the Government Auditing Standards Board, known as GASB, issued GASB Statement number 54 back in February of 2009. As of right now, that is a lot of years ago, if you think about it. Time has gone very fast, but again, like I said, that's why it could be forgotten because it's happened so long ago, and that's why we're here today. So GASB 54 was effective for financial statements for periods beginning after June 15th, 2010. Usually that's kind of how it goes. They issue it, and then sometimes when it actually comes effective is later. And then really the first time that you would have seen this change would have been like our June 30, 2011 and December 31, 2011 financial statements. So that'd been the first time that was seen. So what was the objective of that? The objective of the statement is to enhance the usefulness of the fund balance information by providing clear fund balance classifications that can be more consistently applied and by clarifying existing governmental fund type definitions. The statement establishes fund balance classifications that comprise a hierarchy based primarily on the extent to which a government is bound to observe constraints imposed upon the use of resources reported in governmental funds. And really what this was saying is that they wanted to clarify the fund balances. So when a reader is going to review the statements, review this balance sheet that you're going to have, they're going to want to know what actually is available to spend, what kind of resources do you have that are actually tied up in state grants and federal grants, maybe, for a mill levy of some sort that you have in one of your funds. That's going to give the reader exactly what you're going to have available and what you don't have available. And it also gave some other definitions. I wouldn't say reinvented, but it kind of gave you another chance to see what the fund types are. So let's have some fun with funds. And I know you guys all probably recognize these, but we're going to go over them just because it kind of rehashed them, the definitions in the standard, and it was fine. You were able to see it again and kind of clarify what these actually mean. So most of your entities are going to have a general fund, and that's going to be used to account for all the financial resources not accounted for and reported in another fund. That's kind of going to be your catch-all fund. You're going to have lots of different things in there depending on your entity, from a county to a city or a school. You're going to have many different categories that go in there. You have to make sure that, in the end of the day, the fund balance of that is actually broken out the way it's supposed to, especially if you do have included in your general fund some state grants, some federal grants, maybe some donations came in, all that stuff. There might be a type of restriction on it or a commitment or assigned balances to it. So you have to make sure that you do that right. So that's a general fund. So most people understand that one, I believe. And if you have any doubt about that, please ask some questions about it. But that's a very common one that people are going to have. Most entities at least have a general fund, and some just have a general fund. And once you get some bigger, you have more funds, you're going to have multiple categories. The second one, so special revenue funds, that's going to be your majority of your funds, most likely. If you're a county especially, a lot of your funds are going to be special revenue funds. And these are going to be the funds that the revenues that come into that fund is going to be either restricted or committed for a specific purpose that other than debt service and capital projects. So in essence, let's say you're going to have a mill levy fund and you're going to have a separate fund set up for it. That revenue that comes in is only supposed to be used for that purpose. If you don't use it for that purpose, sometimes there can be some century codes that not allow you to do that or not allow you to use resources for certain things. Don't want to get in trouble. So just make sure, like, if you have restricted or you have special revenue funds, you use them for those purposes only. Be careful for transferring sometimes. There might be times that you want to transfer to another fund because you need to move some resources somewhere else, but always got to be careful with that. Debt service funds. These ones are used to account for the resources restricted or committed or assigned for principal and interest type payments. So this fund is going to be, like it kind of says, it's going to be for your loans and your bonds and special assessments that you are paying on. That's what that fund's going to be for. Types of revenue that can come into that fund usually are going to be like your tax levies that are for it. You might actually have a grant that is supposed to be paying for a loan or bond that could go in there. There could be people who donate money for a certain project that you have to pay off debt. Again, all revenues that can be tied to that debt service, that's going to be included in that fund. Capital project funds. So you probably heard some discussion on capital project type stuff today for, like, capital assets and the budgets, that Alex has been through. This is a very big topic that, what you can use the capital project funds for. And so this fund is used to, for all the resources restricted, committed, or assigned for the acquisition or construction of capital assets. And that's usually going to mean that you're going to have a fund set up for the purpose of constructing, let's say, a road, or if you're going to do a building project, and you are just going to use that fund for that sole purpose, is to spend on that project. That's important because if you were doing your budget, or if you're trying to figure out what to spend on those projects, it's nice to have one fund set up that is supposed to be used for collecting the revenue, and that those revenue sources could also be levies, loans, donations. Again, all could be set towards paying for that capital project. And so that's very important to keep track of. If you never used one of those before, or if you need more information, please ask, because it does help you on your budget process, and it also helps just keeping track of that fund balance. Also, we'll go back 1 second for debt service funds. Sometimes, actually, if you do a bond, they will require you to have a debt service fund specifically to pay towards principal and interest. So also keep that in mind. The last one that not super common in most of our entities that we audit, but it's the permanent funds. And these are going to be used to keep track of, when people donate and there's earnings that you can spend out of, but you have to leave the principal alone. That is what the permanent fund is used for. I think in some cases, like schools might get some donations from some citizens that it's used for, a certain purpose, or, but again, if it's tagged where you have to use it for that and it's only the earnings, a permanent fund is exactly what you need to put it into. Okay, so the first year that came out, I'm sure some people were surprised what happened to their balance sheet. That's probably what they were wondering. And in some cases, I think the balance sheets were pretty simple before, and now you might have quite a bit of information at the bottom of your balance sheet. And it's important. I think it was a good change because, the stakeholders of that report now can go to here and look at, okay, what kind of classes do they have? What kind of restrictions do they have on some of their fund balances? What do they have left to spend? That's all the information actually is going to be given on this bottom of this balance sheet. So it is very nice. I think some people thought it was a little too much, especially if they have many funds. This section got to be quite large, but I think it was a good change overall. Okay, so now we're going to get into the 5 classes of fund balance, and this is what kind of the main change was here. There was definitions that are kind of re-given, which we talked about, but in this section, it's actually going to give you, okay, what makes up all these different categories, what can you use them for, who can do them. So that's what we'll go over there now. So for non-spendable, this is going to be the portion of the gross fund balance that is not expendable or is legally earmarked for specific use. So this is going to be items such as an inventory. You might have a balance, for inventory in your general fund, but you really can't spend that money. That's an inventory that's still kept. So that is why it is non-spendable. And then other items, like prepaid items, deferred expenditures, long-term receivables, that is I would say between inventory and long-term receivables, that is going to be the majority of what is seen in that category. Long-term receivables are going to be stuff like, you have a job development fund and they have grants given out. So they have receivables from all these different vendors. That's going to be long-term receivables. That's where that balance is going to show, because you really can't get that very quickly. You're not able to spend it on whatever you want because that money is still coming in, and now it's not spendable yet. Okay, restricted fund balance. This is probably the most popular category that you're going to have, especially if you're a county or city or school. This is going to include amounts to a specific purpose by the provider, such as a grantor, restricted by tax levy. The fund balance should be reported as restricted when constraints placed on the use of resources are either, by the creditors or by a state agency that gave you the grant, maybe a federal agency gave you the grant, and then also by when you have mill levies as well. Each of those funds, let's say, for example, you have many different types of funds that collect tax levies. Each one of those is going to have their own fund balance and special revenue fund, of course, and they're going to be restricted. Now, within that, there's possibilities to have some other categories, but for the most part, it's going to start with that. Let's see, and I think for the most part too, you might have a case where, let's see, you got FEMA funds. There's a possibility that you receive that money early, or you're getting reimbursed for it, but it hasn't been spent yet. That's going to go into a fund like that. That is restricted because it is only used for those FEMA projects. Okay, so committed fund balance. This is one where I think some people either they forget or they don't realize that this can be is, this portion of the fund balance is really what the board can do for kind of reserving funds for a specific project or a specific legislation that happened. That's not, it can't be restricted or assigned or whatever, but it's a type where they're able to approve it during the board minutes, and you'll see that. One thing that was kind of a tricky part about committed fund balance was, you do have to keep track of that as well, because there might be those projects that get committed one year, but they don't get spent until either the next year or it could be 2 or 3 years down the road. So when your auditor asks you if you've updated your committed fund balances, that's what that means. They're wondering, did you spend any of that yet? And sometimes 1 year might not spend any of it, and that balance is still going to be there. Now, if you don't, if I don't forget to talk about later, if you do happen to see that on your balance sheet and you wonder, oh, I wonder what that committed fund balance was all about, hopefully somebody remembers, because if nobody does, that commitment probably shouldn't be there anymore on the balance sheet, and that probably should put back to another category. So that's one thing that I think maybe some people have forgotten, that can happen. Okay, the next one is assigned fund balance. This one's going to be for the purpose of, when you have a situation where you have a business manager or accountant or accounting auditor, someone responsible for, your general ledger and your records. It's a possibility where some power is given to that individual to be able to set aside an amount of balance towards a project, maybe some kind of insurance deductible that it's used for specific purpose. You want to make sure that you have everyone knows what the situation is with that. It might be documented somewhere, so when your auditors are going to wonder, hey, did you have any assigned fund balance this year? That's what that's going to mean. It doesn't have to be, it might be listed in the board minutes, but it might be something where that's the ability of that head official to do. So you just have to ask those questions to yourself, and maybe just ask the auditor, as well, to explain that to you. Okay. And then the last one is the unassigned fund balance. And this one really is going to be, in a way, your catch-all as well. It's going to be in your, and the tricky part of this one is it's going to be in your general fund. The positive balance is going to be in your general fund. And after everything that you've put out there, like we talked about, the non-spendable, the restricted, the committed, assigned, once all those are listed on the general fund, the remainder on your balance sheet is going to be this category. And that's the one I think that a lot of stakeholders like to see in the general fund, is because they want to know how much you're able to spend on something else. So if you want to take out a large loan or a large bond, they're probably going to look at what this fund has in it, in its unassigned fund balance, because if that is almost zero, or it could be worse than that, they will maybe understand that you don't have the ability to have more debt or whatever. So this one's very important as well. You will actually see a negative unassigned fund balance in only one case, and that is because if one of the other funds has a negative fund balance, which does happen once in a while, that's going to be shown. If there's nothing else above that, if it's negative, it's going to actually shown as a unassigned fund balance too. It'll just be negative. So in those cases, I know we've had many questions about negative fund balances. Can you have them? So I was going to bring that up real quick here too. Yes, you can. There are times that a negative fund balance may happen because you got that state grant, and maybe you had to spend the money first. And yes, you have that fund set up, like which we talked about earlier. That money will be coming into you, but it might not have came yet. So then that fund balance could be negative at the end of the year. So that's why you will have, you could have an unassigned fund balance, a negative amount for that fund. Okay, so how did everyone do the first year? So we'll go over a couple things. So for the first picture, I think if you remember that movie, hoverboard was a pretty new technology. And it was something where Marty Fly didn't know it wouldn't work on water, right? So I think in some ways, GASB 54 was a little bit like this too, where they had all these abilities to do this or that, what we talked about, but nobody really knew what to do with it. So I think it was difficult for some of our clients to know, okay, what's this committed fund balance all about? What is assigned? I mean, who has that ability to do it? Who has the power to do that? And I think for us, we did try to help our clients in the beginning that, we could, give them a template of a policy of some sort to make sure they understood what this GASB 54 was doing and what abilities they had. So I think that did help. I think it took a few years to get all those, if you had commitments, did you have assignments, restricted fund balances? And I think it took a little while to get that kind of straightened out. But I think, once it did, I think people were able to use that. I think people still ask once in a while, like about their committed fund balance ability. What does that mean? So the topic is still out there. I think it just took a little while, to get used to that. For the local government auditors that were doing this, we probably felt more like that picture. And we're on this hoverboard, and obviously if you hit rocks, you're going to go down. So maybe you thought you would be going over it, but nope, you fell on the ground too. So I think between us not knowing what the client wanted to do with some of those fund balances, it was really hard to kind of go through that with them the first time, and just for our own purposes to figure out what that was supposed to look like on the balance sheet. I think after we went through that, and after the clients understood what their fund balances were supposed to be doing and what the balance sheet was supposed to look like going forward, I think that did help a lot. So I think now I think both sets of groups here could probably ride that hoverboard pretty good now after all that time's been spent. So what can you do now with the knowledge that you know today? Now, unfortunately, it's not going to be quite the same as having a sports almanac and to be able to bet on stuff, for the future. You won't be able to do that. And I don't know if you guys caught this or not, but the year in that magazine is 2020 or 2000, I should say. That's a long time ago now, So that's I know I probably feel a little bit older than I would otherwise by seeing that picture, but still okay. So what can you do with the knowledge now? I do think that it's good to go back to read GASB 54 if you can. I think after, if you don't really remember anything about that, or you want to know some more information about it, what you can do, what you can't do, that's a great resource. And I do have a link at the bottom, at the back of my presentation to go look at that. So I think that's a good option. I think you should talk about GASB 54 with some of your board members and some of your other, staffers in your group to see what are we doing with this right now. Do we have balances on our balance sheet that we don't understand? That's what some questions that you can ask. And if you need to ask questions of your auditors, and that's a good option too. If you see a number on there for a long time and you wonder what that is, just ask them, and it's possible that they may not know what that number is anymore either because it was so long ago. So I think it's a good idea to just talk about it. Also, and yeah, just keep in mind, when you look at your report, look at your classes that you see in yours. Maybe you don't see all of them because maybe you don't have inventory, you may not have long-term receivables, so maybe that one's out. But you're most likely going to have restricted fund balances. You're also going to have unassigned for sure if you have a general fund. And maybe you don't recognize some of them. Maybe you have a committed fund balance or assigned that you need to ask about. So that's a good topic too. So make sure you use the 5 classes as they were intended for your government. Make sure that when you do have one of those, is it supposed to be there? I think if you do go look, you'll probably have a couple questions. Please ask. We can, our group here, definitely you can ask our group if you have any questions about what those mean. We can definitely help you as much as we can. And also, create and approve a 54 policy. So I'll quickly talk about that a bit. And that's going to be a policy that obviously the management is responsible for, but something that we've done for our clients is, we've given a template out there for some of them that have asked for it. And I do think that it's good to have one of those, especially because, in your financial statements, you have a note disclosure about these balances. You should have a policy that kind of goes along with it. So everyone kind of understands what abilities people have. What if there's an assignment ability from one of your staff members, they should know, and that would be included in that policy. Within that policy, we've also seen that some people have added a section about like minimum fund balance. There's always a chance that one of those funds is going to go the wrong direction for you. General funds usually have somewhat of a balance in it because you want to have some left over there to carry into next year. If you are towards zero or even towards, below zero, you may want to have something in place where kind of like a plan. What happens when you do go below zero? That's kind of part of that policy if you wish to have that. I think it's a good idea. Replenishing that, if you do have a negative fund balance, what does happen next? Do you cut spending? Do you try to, move some expenditures from one, fund to another if that's necessary or it's needed, or just, make sure that's in the budget next year where you're trying to increase that fund balance by not spending something, or, to maybe move into a capital project fund or something like that. There are always some options you have for those policies. Okay, so my last slide here's the link that I was talking about for 54. And let's say you do happen to have some trouble going to bed at night. Sometimes it's nice to read a GASB statement to fall asleep to. But unfortunately for this one, if you're very excited about GASB 54, you might end up looking like this person after reading it. So be careful with that, of course. But I just wanted to make sure that people were able to kind of hear about GASB 54 again. So we went back in time to go there. And I appreciate that that people stuck around today to listen to myself. And we do have some more coming up afterwards. So I hope that this was a good presentation for some of you out there that needed to hear this. And please ask questions about it if you need that, or email in if you have some other questions outside of this. We're always able to help.
Thank you, Heath. Looks like there's no questions for this round, so we'll save it for the Q&A. We are going to take a short break.